What if the most consistent, most overlooked force influencing market behavior isn't Powell, isn't CPI, isn't even earnings, but the gigantic 10,000-degree nuclear furnace parked 93 million miles above your head? Seriously, have you ever woken up for a trading day and felt off for no reason? Anxious, foggy, impatient, irritable, and you blamed it on sleep, stress, or just one of those days? If that's happened to you, think about this. There are peer-reviewed studies showing that solar storms, literal bursts of radiation and electromagnetic chaos from the sun, can affect human mood, cognitive performance, decision-making, risk appetite, and even the collective behavior of markets. Let me say this again. Space weather has measurable effects on human psychology and stock market performance. And almost no retail traders on Earth talk about this or even know this. We stare at charts, we stare at screens, we stare at the VIX and news headlines, but the one thing we never track is the massive unstable star blasting charged particles at us every single day. Today I want to show you something that might make you look at the markets and at yourself very differently. Because if you think news moves markets, wait until you learn how space weather affects billions of human nervous systems at once. So, first of all, let's talk about why this isn't woo-woo nonsense. Everything in today's video is going to be either grounded in NASA research, NOAA, the National Oceanic and Atmospheric Administration data, peer-reviewed studies in journals like the Journal of Geophysical Research and Atmospheric and Solar Terrestrial Physics, and behavioral finance research from academics who tracked market returns during geomagnetic disturbances. This isn't astrology, this isn't mystical or magic, this isn't conspiracy, this is biology, physics, electromagnetism, human psychology, behavioral finance, mass sentiment patterns, and a market effect that almost no one discusses. The sun is not a cartoon, it's not just a warm yellow circle on kids' drawings, it is a violently active star that ejects clouds of charged particles the size of planets, blasts radiation through the solar system, distorts Earth's magnetic field, interferes with satellites, communications, and power grids, and here's a punchline, has measurable correlations with human mood, cognitive performance, and in turn, possibly even stock market returns. There are literally hedge funds that subscribe to space weather alerts and track everything we're going to be talking about today. So let that sink in. So why should a trader care about the sun? Well, it's simple. Because you're not trading the chart, you are trading human behavior. And human behavior is partly regulated by biology. We all know that from our Mind Over Markets courses and live sessions, and biology is affected by solar activity. If half the planet wakes up slightly more irritable, more risk-averse, more anxious, or more impulsive on the same day because of a geomagnetic storm hitting Earth's atmosphere, well, guess what? That could show up in the markets, not because the sun moves prices, but because it moves people, and people move prices. Before we go further, let's talk about one of the things that economists tracked way before Fed decisions or earning reports, and that's sunspots. Sunspots are areas on the sun where the magnetic field becomes extremely concentrated and twisted, preventing hot plasma from rising to the surface. Because this trapped plasma is cooler than the rest of the sun's surface, the spots look darker even though they are still incredibly hot. They follow an 11-year cycle. Peaks in the sunspot cycles correspond with increased solar flare activity. When the sun hits the peak of its 11-year sunspot cycle, called solar maximum, its magnetic fields become more unstable. Unstable magnetic fields equals more chances for sudden releases of energy. These show up as solar flares, which are intense bursts of radiation that stream out at the speed of light. This is not speculation. NASA documents these increases during every solar maximum. Peaks in the sunspot cycle also correspond with geomagnetic storms. Solar flares often occur alongside coronal mass ejections, CMEs, which send giant clouds of charged particles towards Earth. When these particles slam into Earth's magnetic field, they create geomagnetic storms, the same storms that disrupt satellites, affect radio communication, and influence human psychology. Again, this is well established in space weather records across the NOAA, NASA, and the Japanese Space Weather Center. Also, sunspot cycles influence the sun's total radiation output slightly, which could affect weather patterns. In pre-industrial agricultural societies, weather shifts equals crop failures, which equals economic instability. This is why early economists paid attention to sunspots. Not because they believed the sun controlled the markets, but because the sun controlled weather, and weather controlled crops, which controlled economies. That's right, ancient economists tracked sunspots before they tracked GDP. Economists in the 1800s literally kept sunspot journals and compared them with economic cycles, especially agricultural cycles. GDP didn't even exist as a concept until the 1930s, but sunspot data was recorded as early as 1610 by Galileo. So yes, before we ever had formal systems to measure national income, economists were trying to understand economic cycles by looking at the sun. Were they right? Not entirely, but they weren't crazy either, especially for the era they lived in. Their logic was simple. Sunspots affect solar variation. Solar variation affects climate variation. Climate variation affects crop yields, and crop yields affect economic boom or bust cycles. Today, economists consider this more historical curiosity than a predictive tool, but the historical fact remains. Humans have been watching the sun to understand economic cycles for over 300 years. But here we are in 2025, or for some of you watching, 2026 or beyond. So let's talk about how solar activity affects the human nervous system. Solar systems don't just make pretty northern lights. They interact with Earth's magnetic field, which indirectly interacts with the human body. So here's the science. Geomagnetic storms affect heart rate variability, HRV. Multiple studies show that during geomagnetic disturbances, HRV decreases. Lower HRV equals higher stress levels. Higher stress levels equals possible worse decision making. HRV is the same metric elite athletes track to know if they're mentally sharp. If the sun can lower HRV, it can, in theory, affect training performance. Fact number 2. Geomagnetic storms suppress melatonin. Melatonin isn't just a sleep hormone, it affects mood, stress levels, and cognitive function. Studies show that electromagnetic disturbances reduce nighttime melatonin production, meaning a solar storm can literally make you wake up feeling off. You don't even know why, you just feel more anxious, more irritable, less patient, and even foggy. Ever have those days? Yes? Well, space weather might have been the culprit. Fact number 3. Geomagnetic storms influence serotonin. Serotonin regulates mood, calm decision-making, and impulse control. Several studies show a correlation between geomagnetic activity and serotonin levels in the brain. More disturbances equals more emotional volatility. Now imagine millions of traders and investors experiencing this on the same day. You see where this is going? The question is, do markets produce lower returns after geomagnetic storms? A study published in the Journal of Geophysical Research analyzed stock returns and found that periods following geomagnetic storms correlate with lower market returns. Another study in behavioral finance found increased geomagnetic activity has led to increased global risk aversion, meaning that when the sun freaks out, investors pull back. They take fewer risks, they hesitate more, and they sell faster. Here's another question. Does more geomagnetic activity equal higher negative sentiment? Well, researchers in 2003 found that during high geomagnetic activity, investors show more negative bias. Market sentiment skews bearish, and price declines become more likely. Not guaranteed, just more likely. Why? Well, because fear is a biological response, and solar storms amplify biological stress. This is why some hedge funds actually track space weather. Not publicly, you won't see it in a white paper, but data vendors sell solar wind speed, proton flux, K-index, which is geomagnetic disturbance levels, and solar cycle projections. Why would funds pay for this unless it mattered? So, if you've ever had a morning where you wake up irritated, snap at people, feel reactive, can't focus, hesitate on trades, or just chase impulsively, and it came out of nowhere, there is a small chance it lined up with a geomagnetic disturbance. NASA publishes daily alerts. You know what's creepy? Sometimes you'll look at a day where your trading performance sucked for no reason, and the K-index, the geomagnetic disturbance rating, was spiking. Am I saying that what the K-index says has an effect on your trading? Not proven. Is it correlated? Very much, and correlation matters in behavioral markets. We always thought waking up in a bad mood was random, but what if it wasn't? What if space weather was one of the hidden variables in mass sentiment? Alright, let's go over how to read the KP index, the geomagnetic storm scale. Think of the KP index as the volatility meter for Earth's magnetic field. It tells you how disturbed Earth's magnetic field is due to solar activity, which is what affects satellites, radio signals, power grids, and human psychology. So the scale goes from 0 to 9. 0 through 1 equals calm. That means minimal geomagnetic activity, nothing unusual is happening here. 2 to 3 means slightly active or mild disturbance. This is where we see small fluctuations, very normal background variation. This is what most days look like. A 4 reading means it is active. We might see noticeable magnetic movement, sometimes associated with minor effects, not a storm yet, but elevated. A 5 reading is a G1 storm, a minor geomagnetic storm. This is the first official storm level. You can see small issues for power grids, minor satellites getting impacted, and some human studies note mood or cognitive shifts near this level. A 6 reading is a G2 storm, which is moderate. You might see voltage alarms in power systems, satellite orbit corrections, sometimes required during these levels, and increased biological sensitivity. A 7 reading is a G3 storm, and that could be strong. Power grid issues are more likely at these levels. You might see HF radio problems, navigation system degradation. These are the first storms that could noticeably disrupt systems. An 8 reading is a G4 storm. This is severe. You might see widespread grid issues, major satellite disruptions, GPS timing drifts, airline rerouting, and clear effects on communication. And a 9 reading is a G5 storm, which is extreme. This is the type that could mimic small versions of the Quebec blackout. These are very rare and the highest risk for disruptions in modern tech. So each bar on this chart equals the KP index for a 3-hour window. This is the NOAA bar chart. The NOAA measures Earth's geomagnetic disturbance in 3-hour periods, and every bar is 1 reading. The height of the bar equals the storm strength. So bars at 0 to 3 is normal, bars at 4 equals elevated but not a storm, and bars at 5 plus equals official geomagnetic storms. The colors match the NOAA scale, so green equals normal, KP under 5, yellow equals G1, KP at 5, orange is G2 and G3, which is KP 6 and 7, and red is G4 and G5 storms, which is KP 8 and 9. So for traders, the KP is from 0 to 3, that's a normal day. There will probably be no meaningful geomagnetic impact, and it's not likely to influence tech or human behavior. KP4 is elevated. Some people might start feeling more cognitive or mood shifts, so this is worth noting but not serious. KP5 plus is the storm zone. This is where research gets interesting. Studies show that cognitive performance dips, mood becomes more negative, risk appetite decreases, and markets historically show slightly lower returns after storms. So traders watch KP5 through 6 for minor to moderate storms, and KP7 plus for big tech disruptions. So this is basically the VIX of the Earth's magnetic field. If you're ever wondering why you feel off, distracted, anxious, or markets seem hesitant and weird overall, sometimes checking this chart can explain a lot. So what does this mean for traders? Well, there are 3 things to keep in mind. First, you are not just trading charts, you're trading people, and people are biologically reactive creatures. Second, collective psychology doesn't just change because of news, it changes because of sleep, mood, stress levels, cognitive sharpness, emotional resilience, and yes, environmental conditions. And third, when millions of people feel subtle shifts at once, it could create real volume differences in the market. Risk appetite changes, volatility pockets, hesitation patterns, bearish days, and off sessions. This is Behavioral Finance 101, just on a cosmic scale. So, to review, the sun is not stable, it's constantly ejecting energy. These solar events hit Earth's magnetic field. When the magnetic field shakes, human psychology shifts. When human psychology shifts, human behavior shifts. When human behavior shifts collectively, markets can move differently. Multiple peer-reviewed studies confirm correlations between geomagnetic disturbances and bearish market behavior. And the craziest part, almost nobody in retail trading even knows that this exists. We spend millions of hours studying charts that reflect the behavior of people, but not even 10 minutes studying the forces that influence said people. So who here remembers the Quebec blackout in March 13th of 1989? It was a geomagnetic storm so intense it shut down an entire region. This is a 100% fact, not theory, and here's what happened. A massive CME blasted towards Earth. When it hit, it distorted Earth's magnetic field so violently that it induced electric currents in power grids. In Quebec, those currents overloaded the system. The entire province went dark. 6 million people lost power within seconds. This was the first modern warning shot. If the sun sneezes hard enough, modern technology cannot keep up. And one thing to think about, markets run on technology. Let's look at the Halloween storms of October 2003. These events were so powerful that airlines rerouted flights, GPS accuracy got degraded, satellite operations malfunctioned. And yes, while markets did not collapse in 2003, the behavior of markets during these storms showed something interesting. We saw higher intraday volatility, lower risk appetite, sell first, ask question later behavior, and increased uncertainty in tech sectors. None of this was attributed to space weather by CNBC, but it lined up perfectly with what behavioral finance research found. Geomagnetic storms increase fear-driven decisions and reduce risk-taking. These storms became the foundation of multiple academic papers later on. Okay, but what about the human side? How do solar storms affect you? Well, studies have suggested that cognitive performance drops during geomagnetic activity. Study after study has shown slower reaction times, reduced working memory, lower attention control, and higher impulsivity. This isn't speculation, this is real research. You know what this all means in the markets for you? Hesitation, chasing, overreacting, cutting winners early, letting losers run. Human error increases, all things that we don't want while stock trading. A popular 2003 behavioral finance study found a clear pattern. During geomagnetic storms, negative sentiment increases. People are more pessimistic, more prone to risk-off behavior, more sensitive to losses, more likely to withdraw or sell prematurely. This is a massive behavioral edge if you understand it, because mood shifts equals risk appetite shifts, which equals market behavior shifts. Stress hormones might even increase. This one is less well understood, but multiple studies have shown that geomagnetic disturbances are associated with higher stress, lower HRV, increased cardiovascular strain. So not everyone feels this consciously. Some people just feel, I'm irritated today. I can't focus. Everything feels harder. Ever had one of those mornings where you open your charts and just felt off? There are days when that aligns perfectly with spikes in the K index, which is why knowing how the K index works can be an edge for traders. Also, sleep disruption leads to bad trading behavior for a lot of us. Solar storms equals melatonin disruptions, which equals poor sleep quality. Poor sleep quality equals worse emotional control, worse impulse control, worse focus, which could equal losing money in the market. That alone can explain premature selling, over trading, impulse entries, hesitation at the worst times, and emotional decisions. Think about how many bad trading days were actually bad sleeping days disguised as bad trading days. Now imagine millions of people experiencing this at once. That's when it becomes a market phenomenon. So what does a solar storm trading day actually feel like? Well, traders describe it as, I don't feel sharp today. The charts just look weird. Nothing feels clean. The market feels heavy. It's like everyone is scared of something that isn't happening. Or, why am I second guessing everything? Sound familiar? Now imagine millions of people feeling a 5 to 10% dip in cognitive clarity and emotional stability. That's enough to create subtle risk-off flows, reduce aggression in buying, increase premature selling, amplify fear, and increase random volatility for millions of people in the market all at once. So what does a solar influence day look like in the market? Well, now again, this is not SEC level cause and effect. This is a behavioral correlation plus decades of collected market data. So here's what we tend to see when the geomagnetic disturbance level is elevated. First, risk off leaning. People become just slightly less courageous. You get smaller position sizes, fewer YOLO buys, less aggressive breakout attempts. It feels like everyone is holding back. You'll also see hesitation behavior. This is a big one. We're talking about stuttered entries, second guessing, pulling orders too early, and taking profits out of fear. Solar storms don't create the hesitation, they amplify the biological pathways that cause it. You could also see increased intraday chop. When fewer traders are decisive, markets don't trend cleanly. They chop, they fake out. Ever had a day where every breakout fails and every breakdown pops? Yeah, that's hesitation and risk aversion on a mass scale. You might also see random volatility pockets. Not news-driven, not earnings-driven, just weird. Behavioral finance researchers call these emotional volatility clusters. You might also see faster selling and slower buying. This is so consistent it's freaky. People sell emotionally faster than they buy logically. And when the KP index is elevated, that signal gets louder. You might also just feel a general heaviness in the market. People describe it like the price feels sluggish, or momentum isn't real, or volume feels scattered. This heaviness is simply a reflection of lowered human enthusiasm, lowered cognitive sharpness, and an increase in emotional decision making. So let's get into the Trader's Solar Checklists. I'm going to give you a simple checklist that you can use. You're not using this to predict the market, you're using this to understand the emotional climate behind the market. The same way we look at the VIX, the same way we look at put-call ratio, and the same way we look at fear and greed. This is just another sentiment input. So first, check the KP index. 0 through 4 equals normal, 5 plus equals minor to major storm, and KP 6 plus means more real potential for tech or communication issues too. So 5 or above, you might see a possible mood or cognition effects. Secondly, notice how you feel. Before blaming yourself for foggy thinking, impulsive trades, hesitation, irritability, or weird emotional swings, check if there's elevated geomagnetic activity. You might be internalizing a global atmospheric condition. And of course, don't force trades on foggy brain days. Your nervous system might be working against you. Markets are powered by people, and people are powered by biology. Markets are a reflection of human nervous systems operating at scale. Your stress, sleep quality, hormones, alertness, emotional state, and cognitive sharpness all play a role in how you execute your trades. Now amplify that by 100 million people. Funds, retail institutions, market makers, algos reacting to human order flow. If the sun influences human psychology even slightly, then it can influence markets indirectly. Not mystically, not magically, but biologically. This is behavioral finance with a cosmic catalyst. And awareness creates advantage. You don't need to become a space weather expert, you just need to understand one thing. The forces influencing your psychology extend far beyond your computer chair. Whether it's sleep, stress, diet, emotional patterns, cognitive bias, or environmental factors like geomagnetic activity. The more aware you become of what shapes your nervous system, the more control you gain over your trading. That's what separates amateurs from professionals. Professionals study the human behind the trade. Amateurs only study the chart. And today you added one more tool to your psychological arsenal, something that 99% of traders would never even think about. Welcome to the Solar Trader Mindset.